Phase 3 and Income Group have had a relationship since 2022, and we've been processing transactions during that time for ourselves using earned wage access, and also for our customers as well through payroll managed services. And the key question that we're here to answer today is why faster payments rather than Bacs processing, and some of the challenges essentially that we've faced with Bacs. And one of the key things that drew us to be speaking to Income Group and to build the relationship was the risk really that we faced around Bacs. Just to explain what I mean by the risk associated with that, as a payroll provider processing hundreds of thousands of pay slips every single pay period, we have to have a really robust process to make sure that those employees are actually paid. And there's been a number of times where we've deemed that the risk of Bacs is a little bit too high. In particular, and we've discussed this in the past, around Christmas time, where everybody's trying to process Bacs files all at the same time, and there's a bit of a blockage within the network. And just the issues around Bacs itself, given that there's a 3-day cut-off period, it's hard to recall the transactions sometimes if they've already been processed. And we wanted to be able to offer our customers a really robust process with a disaster recovery process in place. So what Income Group means for us as a supplier is that we can provide those services using faster payments. So the employers can fund the account just the day before. We release payments scheduled at midnight, as we would with Bacs, and the payments are all processed instantly. And it also means that both us and our clients have 2 extra days essentially in the pay period to be checking payroll, reconciling it, and dealing with any issues and late entries. One particular issue that we faced in particular with a customer was they came to us and they weren't able to process Bacs for their payroll. It was due in 3 days' time, and with Income Group we were able to set up an account within 24 hours. We had the account set up for that customer in their name and able to process payments within a 2-day period essentially. And that's really important for us because I think, like yourselves, customers come to us when they're in that time of need, when they've got an issue, they've got an emergency, and we are known as the people to come to when a payroll has failed and customers need support with actually processing payroll in an emergency situation, like when the payroll manager might have gone off sick or the software's gone down. And we need a supplier that can be as agile and responsive as us, and that's what we've found with Income Group. So our relationship started really in 2022, didn't it, when we first started discussing faster payments and how you could support us. The onboarding journey in particular was really helpful. We use lots of different payroll technologies, which is a challenge for any banking provider, and that means that we have lots of different file formats that we need to be able to pass files across to the system in. And essentially what we managed to set up between us was a standard Bacs file format that we use, the Bacs 18 format, which is used by many payrollers. That format is accepted by Income Group, so we've actually set up all of our payroll software now so that it pushes directly from the payroll software into Income Group. The files are produced and we get notifications, and then the approval process kicks off. So in terms of migrating our customers, that process was massively simplified. We were able to share the detail of the accounts with the customers, have them understand the funding process, and that meant ultimately that they are in control of their own payments still. So we take no further control than we did before with a service user number and Bacs. But from an onboarding perspective, customers can be up and running quickly. And when we're doing the service user number process with Bacs, that can take up to 2 weeks to get a response from the bank. Whereas as we've seen with Income Group, it's within 24 hours, we've got a new account set up and ready to be funded and pay employees. So that onboarding experience, both for new clients and for us as a bureau, really just streamline and make the process really efficient.
Yeah, and I think, James, that's great saying it. We've only ever used faster payments. So the first, but I've been around, Bacs for payroll since whenever. So the first thing that we wanted to do was, so if someone's making a planned change, then make it simple so it's not going to overcomplicate. When somebody's in an emergency, which unfortunately happens more regularly now, the first thing that you need is that, sort of assurance and calmness around, okay, this is actually something that we've done several times, and it's quite straightforward in terms of, from A to Z, this is how we do it. So that's how we've kind of built it. From working with Phase 3, I think you've got that same philosophy. So every time we've had that situation, we've got to the end point where, of course, the customer's employees have been paid when they're supposed to have been paid, because that's how we approach it. So we've got that.
and we share the risk on the customer's behalf.
Absolutely. That's the bit I was going to sort of say. It's a really good point. Is the risk is, I think, and talk about it more later, but the risk, because the emergency and that happens, we've just taken away all of that. Yeah, literally, sounds a bit corny, but it is like an emergency service that I can't pay people. Okay, you will be able to in 24 hours.
Yeah. And what we've always found is when we've had that emergency situation, we've then continued to use the faster payment solution for those customers because they recognise the value in it, and they also understand that means that they have greater time, greater flexibility, and in many cases a reduced cost as well. Because there is this perception, isn't there, that faster payments costs more than Bacs.
Yes, and it's been in existence, since faster payments for corporates. The business came online in 2009, so it's a constant. The bit I sort of always look at and see is that when the emergency strikes, the business pays an absolute fortune. Rightly so, because it's got to pay employees, it's people, but they pay a fortune. And actually, the resistance to change of cost, prior to that, has kind of all gone out the window.
Yeah.
So, I kind of put it to in your business, it's using Bacs, nothing wrong with it. It's the equivalent technology of like using Microsoft Vista.
Yeah.
And we obviously all moved on from that whenever we moved on from that a long time ago. So it's one area that I would say that, if you look at it in that way, the change to move across, if it's just direct cost comparison, it's quite challenging because it is a slightly different price, but it's not the same product, it's a different product. As in, one takes 3 days and has got latency built into it, and one is instant and has got that instant notification process. So there are some benefits. And then the last thing I'd say on it really is that it's, again, payments is probably the one area of a business, possibly the one area of the business that is left with that risk exposure.
Yeah.
And that's where I would really encourage any payroll or any business finance team, HR, etc., to de-risk that element. So I remember, when I was moving corporates over to Bacs, decades ago, pretty much every corporate at that time had two.
Yes.
Because they had a backup or they had a contingency in the event that they couldn't pay. Mm-hmm. And that's gone away. And it went away, I think, when Bacs got updated in 2005, that long ago, 20 odd years. And it went away at that point. So the contingency isn't necessarily built in.
Yeah.
So if it's a direct user of Bacs, then I'd encourage you to look at contingency, but first things first is just make the migration. I don't know, you manage the contingency for customers, and you do that very effectively. And therefore, I'm preaching to the converted, but direct users, I'd be, first things first, I'd just be moving to a digital payment and just de-risk the business.
And from an income group perspective and a cost by cost comparison, if you're a customer currently uploading your payroll into your bank for faster payments, and submitting multiple files. One of the customers we work with, actually, they have a limit of £100,000, so they have to submit over 16 files every single month into the bank, and you've got to chop your Bacs file up. You're introducing risk there that you might pay somebody twice accidentally. And then on top of that, the bank then starts to say, is this suspicious? Because we've got 15 files all being loaded of £100,000. So they were having real challenges with that, and we were able to shift them across to income group. But actually, the cost per transaction with income group is less than it is with a standard bank as well, isn't it? So the actual per transaction fee is less.
Yes, and we can, as we do, we can help anyone with what that cost comparison looks like, because the things that we asked are to include in that is the indirect costs, which is kind of what you're saying. How long does it take a person to split 16 files, and what happens if something gets missed in that as an accident? Those types of things. So those indirect costs are the things that we really have the detail on. The direct cost everyone knows and says, well, Bacs is X, faster payment is Y. And I think when leaving it there is probably just a quarter of that journey in terms of cost comparison. So we can help with that. We can take time and explain and agree. in the round, as you've just said, is actually it's actually a lower cost per transaction, but a massive upgrade in terms of the security that you have,
and risk reduction.
And risk reduction, exactly that is where I would say.
And it's not just for payroll, is it? The customers can use it for supplier payments, paying HMRC, third parties, etc.
So I think that's why we look at it as payments. Obviously, our core is payroll, but we look at so salary advances is a still linked with obviously payroll, but a huge area in expenses, supplier payments, accounts payable payments. So they're all areas that you can gain efficiencies from, take the risk element away, make the processing a better experience for the user. I mean, that's the other thing as well, is that the challenge of having everything ready by a deadline every cycle is. I mean, again, I'm preaching to the converted, but it's like I feel really sorry for the individuals that have to go through that every month or every week, and it can be different. And then I think just on the sort of last positive on that is the after effect is if someone underpayment does happen, rather than waiting for something that you already know and the wait is 2 days because it's coming back into the Bacs reporting cycle. With faster payment, you actually know before the person contacts you to say they've been underpaid. And that reaction and responsiveness, I think, is probably one of the undersold elements really of the service, because certainly the payrollers that we work with, they say that having that information and contacting someone saying this salary has not been received to whatever extent, level, whatever it is, and so on. And then saying this is now what we need from you to do something about it, and having all of that rectified within like a morning is a huge advantage. And again, to the individual that hasn't received the money, which obviously is the be all and end all.
And we don't want to sweep that into next month and issue an advance payment that's being calculated incorrectly and then have 2 months of payroll that doesn't quite make sense. I think the other big issue that we see with the faster payments uploading to the bank directly is the level of access that people have then to people's salary information. And again, that's something that a lot of our customers quoted to us, that they wanted us to take the payments away from their team, because the staff that were doing the bank reconciliations in finance were seeing thousands of transactions every month relating to employee wages, whereas in a Bacs or a faster payment setting from an income group perspective, there is one payment that leaves the account which matches the net pay on the balance sheet item, and then the payments are processed separately with the people who have access. And access and governance is an important part of this as well, isn't it? So there is multi-level approval built into the platform, so multiple people have to sign it off before it actually gets released to the employees.
And we've tried, again, you've helped us with that, evolution of how does, because it's just a payment, as in a like-for-like payment, but one's instant versus 3 days. You've helped us massively. Phase 3 of, sort of said, there's this piece that you'd want to see within the application. So, as you know, our application is called IG Send. And we've involved that with your guidance and with our customers' guidance, just to explain it. But you're right. I mean, it's important to have that segregation, and then that control in terms of minimising data, not just from a sensitivity, but also GDPR and everything else standpoint is a critical thing. So all of that is captured in the application, and it's easy to work. And I think that the final thing that's just for me on it is kind of how we sort of move data in and out. We try and do things if we can with API, and if it's not API, then we do things on sort of bulk file transfer securely. So we're not, we don't want anyone to have to upload 16 times. We just want, we want one set of information that we can take and you can then see in the application.
And from an audit perspective, it should be seamless. I know I press the button in our payroll software that says send Bacs, and then I get an email from Income Group to say your Bacs file has arrived, and I validate it. And an auditor, in particular for us, we have to be SOC audited. The auditors have said that process is exactly what they expect. There shouldn't be a download, potential manipulation, and upload. It should always be a straight through, pass through.
And that's it. I mean, it's kind of making that, as you said, exactly. So these are all the tiny points, but the major items, because we don't always pick these out to talk about them. But I think on that audit standpoint, so again, when I was first moving businesses to Bacs, the element of fraud and risk of fraud was huge in terms of where the file could be manipulated. So these are all things that are in the sort of the process, they're already built in, but they're huge advantages over technology that is ultimately now 20 years old. I mean, and it's not necessarily the technology the company's using, but it's what it's interfacing and linking with. So these are they're sort of small things, I think, once you're processing, but when you step back and look at what you might be doing today and compare them, they're actually quite major advantages. They're big steps forward. So that, I think, is also part, as I say, with the indirect cost elements, you actually get these gains. So you do lose, or you get the advantage, you reduce cost elsewhere, so you get the advantage that you can factor in. Certainly we can help with that.
One of the key questions that we're going to discuss and ask now is around earned wage access. And earned wage access is something that is often seen as controversial, so I think it's worthwhile having that conversation to debunk some of the myths about earned wage access and what that actually means. So earned wage access from our perspective as a payroll provider means that employees can access a portion of their salary, their wage, before the normal payday. Now, that has a number of advantages for employees, where paydays might move in a month, and employees want to have that consistent, regular payment, but it also means that employees can be in control of when they receive their earnings. So a lot of the objections and questions that we get asked around are, what if they leave partway through the month, and what if there are some changes that you're not aware of? And I think it's important to explain how solutions like Income Group have these controls built into the application to make sure that we can't pay somebody something that they're not actually due. So if we start with that point first of all, and phase 3 from an earned wage access perspective, we implemented about 6 months ago now, and we did that at a time when we were actually shifting our payday. We had a last Friday of the month payday, and we moved that to a last working day just to make it more consistent for everybody. And as part of that, we introduced earned wage access so that employees could choose. And that was for a few reasons. One is we are a very flexible employer. We like to offer benefits to employees, and we wanted them to have the facility to take their pay when they wanted without having to come and ask somebody in finance or HR to actually make that payment, because there's an element of embarrassment there sometimes. But also, again, to give them control over when they take that money. Now, we also have a savings scheme at phase 3, which we deducted from payroll. We held that in our account, and employees could request that whenever they wanted to draw down against it. So again, that's giving the control to the company rather than to the employee. So with earned wage access and through Income Group, the employees choose how much of their pay they want to put into a savings account. It's actually got an interest attached to it as well, which they didn't have when it was in phase 3's account. And it means that, again, they can choose whenever they want to draw down their savings, if they want to save more this month and then use that to draw down later. So they're drawing down what they've already earned rather than what they're due to earn in the current period. So there's lots of different facets to this in terms of how we actually run this process. So 6 months ago, when we implemented earned wage access, we gave everybody access to the solution, and adoption was really high very quickly. We set our thresholds at 80% of the salary was a maximum that an employee could draw down within the month, and any one transaction was limited to £200. And we set that limit to have some control in place. But we also rolled it out and introduced it alongside some financial wellbeing training for employees as well, to understand how to use it most effectively. And we have a number of employees who have variable pay as well. So we included that in the instructions on how that would work. And really one of the big advantages was implementing the savings element of that. We transferred the balance that we held into the employee's new savings account, and they could then choose how much they added to or deducted from that account as and when they wanted to. So the earned wage access for us was much about empowering the employee. And one of the important distinctions with Income Group is that the employee doesn't have to pay for that. If the employer is happy to pay the cost for the drawdowns, then the employer will pay that and the employee is not affected. We're in control as the employer of the salary that the person is recorded as having. We update the system with if they've had a change in tax code, for example, or a change in salary, or if somebody's leaving, and that then automatically adjusts the calculations within the platform so they can't draw down more than they're entitled to. And that process all happens by passing the data into the system through an upload, which updates the records. So for us, it's a seamless process. And one of the big questions that we get asked when we discuss this with our clients in particular and with other payrollers is, what happens with the FPS at the end of the month? What happens with the actual settlement of the payment? So FPS, if we tackle that first from a payroller's perspective, when we are paying our payroll to our employees, we don't deduct any advance that they've had on the payroll side of the transaction. So employee has drawn down £200, their net pay was 2,000. We report the 2,000 to HMRC. There is no difference in the employee value earned. And then when it's paid into the platform, which then releases it to the employee, the advance is taken within the banking end of the process. So nothing is affecting the FPS. So it's fully HMRC compliant from that perspective. From a settlement perspective, we produce the Bacs file in this payroll software, pass that into Income Group, and then when we process our payment, we pay our full net pay value into Income Group, and then those funds are dispersed, less the advances that have already been taken. Now, with the advances that have already been taken, the question then is, how have those been funded? So part of the earned wage access offering from Income Group is that there is the credit facility there. So the employer doesn't have to pay the employee early in the month. We've got a credit facility to draw down against, so the employee can take their pay whenever they want it, and we only pay that value back when we would have normally paid net paybacks. So from our perspective, it assists with cash flow. It ensures that we can continually monitor the amount of advances that employees have taken, but we don't need to worry about actually making the payment into the platform. And that's a real interesting distinction, is it? Because a lot of people don't understand that actually there is that credit facility there. So if an employee wants to draw down 5 times in a month and they want to take £10 each time, nobody in the finance team has to sit and make that payment to anybody. It's all done through the application, through the platform, and there is just a charge at the end of the month for anything that you actually borrowed then from that credit facility.
Yeah. And so I think, because what you've just described, I think it is really straightforward and simple. And I think that's also just part of how you're operating. But for us, when we looked at this, and we first looked at this in 2018, so I think that's one other thing, is that this isn't something that we've just looked at overnight. And we've introduced gradually, and there are a lot of companies that have, earned wage access companies that are available. They introduced their models, I think, really when COVID sort of struck and during that period. And I think with when you get anything they were the first sort of version. I think always the first version isn't always the best version. It can, it fits a requirement, and then you learn from that, and then you build the version 2 and so on. So we resisted joining that, and one of the primary reasons we did that is because we've always felt it wrong for a person to pay to receive what is theirs. Yeah. And that's our philosophy. So that's the first thing that we wanted to do. The second thing that we wanted to do was we wanted to make it simple for the employer, for you. So, we hear that some employees that are using OMH Access don't have visibility. Again, I find, that's not a great thing, as you're saying. There's no control, not necessarily no control, but there's little control on what the employee is receiving. So therefore, they get to the end of the month and they've had the majority of the salary and they haven't got enough salary to cover major bills.
Funnily enough, I was having a conversation yesterday with one of our employees about just this topic. So they didn't like the thought of having the ability to draw down their wage early. But what they did want was, when they're paid their bonus quarterly, they wanted that to go into the savings pot so that they don't really notice that they never had it. They weren't relying on it anyway. They've got their normal net pay. But then, and their boiler broke over Christmas, he said that was an absolute lifesaver because I never missed it. I didn't really know it was there. I don't really log into the platform, and I almost forgot it was there until that emergency happened, and then I could draw down against it then. I think that's part of the advantage of a solution like this, where you are adding to your future pot rather than taking something that you are due in the future. And that's an important distinction that a lot of the providers don't have, and with the advantage that it's gaining interest as well.
That is brilliant, I think, because that's exactly what is the objective, really. And I use again, it sounds like a bit of a cliche, but that is actually financial well-being. So you're not actually you're not forcing it. You're just actually, that's happened. and the effect on the employee is a positive one, and hopefully that strengthens the trust, with and the engagement with one another. So I think it's great. I think, and that's certainly what we, particularly we introduced that, as you say, sort of 6 months ago. The take up we've seen, people not looking actually at salary advances, but just saying, how can we introduce, savings, auto save, and you don't have to use salary advance. You can use the savings account because it's just a deduction from payroll, which you choose. So you choose to do. So, I think to anybody, as in business, that's thinking about employee benefits. I know we were talking about moving to faster payments. Faster payments actually is the entry point, because you can't operate salary advances on a 3-day process. Has to be instant. And then if anyone's thinking about benefits, it's then, savings is actually an area that you can introduce without moving from Bacs. You can still use it with Bacs, you just put it into there, and then you can evolve. So we've definitely sort of put more into IG Send, so that the employer, the business, can say, well, look, this is our entry point, we'll start there, and then we want that relationship where it's added to at the pace of the change in the company.
Speaking about employer benefits, one of the other advantages we've seen in particular when speaking with new clients who have a weekly payroll is actually there can be a fundamental shift in how that's processed. So in a natural weekly payroll, they would have to run the payroll every week. They'd have to have the funds in the account every week from a cash flow perspective to pay the employees. On a weekly payroll with Bacs, you're going to be sending it usually on a Wednesday to pay on Friday. So you've only got Monday and Tuesday to check and reconcile the prior week. And that has a number of issues there. The biggest issue being the cost of that, because you're processing essentially the same thing as a monthly payroll 4 times. So in the conversations we've had with our prospective clients is, do you actually need to retain that weekly payroll, or can we put everybody on a monthly payroll but give them EWA? And then they can choose if they want to take their funds monthly or weekly, and the cost to the employer doesn't shift. In fact, it's probably a massive reduction because you're only running the payroll once. Cash flow is eased, and there's the lending facility on top of that as well. So really, it's from a CFO perspective, it's a real different approach. And when we discussed it with them, I could see they didn't quite understand at first what we meant. And when we described the process, they thought, why haven't we done that before? It doesn't make it doesn't make sense why we would still be paying people weekly in this way. And again, I think what's really interesting there is when we've moved clients like that across in that setting, people haven't actually drawn down weekly. They've preferred to revert to the monthly pay. And as with previous years around Christmas, sometimes people change paydays. We assessed this year and said, because of the way Christmas fell in 2024, we would have had to pay people on the 20th, really, which would mean a 7-week month until the next payday in January. So we said to our employees, we're not paying early, we'll pay on the 31st as usual. If you want to draw down, you can. 5% of our employees drew down early, whereas in the previous years, every single person has been paid early. And it's a really interesting insight into how our assumption is that they want that, but actually, when you give them the control, they all decided we don't want that.
And I know, because when we were discussing that in November, I thought this is really positive, as in the outcomes. Because we've been talking internally just now, so people in that 7-week period, and I'm sure lots of people will plan for that, but exactly. Reality is the 7 weeks is a huge amount of time. So I think your approach to that, and we've had others follow that, and that's we've got the next sort of is it too early to mention the E word? But Easter coming up. That's the next sort of pinch point. Is actually you can control these things better. And you're right. I think is actually EWA with weekly payroll is massively reduces the workload. Literally, I think I'd be doing it straight away. And always we've been introducing with monthly payroll is just saying, look, let the monthly payroll work on a weekly basis. No admin for you, but you just make it available on a weekly basis, and then it's up to the person, whether they take it or they don't, or they automatically put it into savings. So it's definitely it's evolution of that cycle.
So one of the objections that we hear a lot is faster payments is new, and Bacs is the proven, trusted solution. Faster payments isn't actually new though, is it?
No. So 2008.
Yeah.
For what we use, as in us consumers, people, we use every day. And I don't know anyone that doesn't use faster payments.
Yeah.
2009 was when it was introduced for businesses, only a year later. And it was operating really at a level, a transaction limit level of 100,000 up until around about 3 or 4 years ago. I think it was 2020 or 2021, something like that, where it moved to 1 million as a transaction limit. And that's it. So it's been operating all of that time. It's a well-established process.
Yeah.
It's managed by an infrastructure called VocaLink, which is regulated by the Payment Services Regulator. And VocaLink manages Bacs, faster payment, and something called check and credit clearing. And that whole operation has been operating. Obviously, Bacs checks is the first one, then Bacs, then faster payment. But yeah, I mean, it's a well established.
And you pick up an interesting point there, because we all use it personally every single day. I know from my own perspective, my salary gets paid into my main account, then we transfer that into our joint account, and we move it around to various spaces in Starling and share funds that way. So we use faster payments every single day ourselves in our personal life. So why wouldn't we in the business?
And that's just so. What you just described is exactly our house too. So we do everything on it moves into one, moves into other pots, and so on, and that's it. So it's there. Yeah. So if you wind back, why would you then say, well, I'll leave it on a 3-day process?
Yeah.
And it wouldn't work. I mean, because someone says, "Oh, could you just pay that, or could you give me that?" We all work on the instant gratification basis of that's done.
And the flip side of that, I suppose, is the risk, isn't it? Now with Bacs, you mentioned earlier, there is a latency built into that, and that is so that there's time for clearing, but also that from a banking perspective, they are checking whether or not those funds are actually available, and it can be reversed up to a certain point in the day. So when we think about that, if I have to commit on Wednesday that I'm going to pay £2 million out on Friday, if that £2 million isn't in my account at that point, that's my risk, and it's my bank's risk. They give me that facility through Bacs. Through faster payments, if I notice that there is an issue with that process, whilst it's sat in income group, I can still be making changes to that file, cancel the process, unschedule it, up until essentially the second before it actually gets paid, can't I? So in essence, I've actually got more control, because that latency is still there, but there is no element where I can't make a change, which there is with Bacs. Once it's actually gone to clearing, that's it then, it's too late, isn't it?
And that's it, you're right. You're taking that risk away, because you've got that control. You'll probably tell me more on that, but is that you can make a change, but then that's a charge by the bank to make a change to the file. So you don't have that.
And it's not guaranteed.
It's not guaranteed.
It's a request. It's not guaranteed.
It's not guaranteed. Okay, so there's a charge. So you lose that risk and potential cost from having that control. So where that's led some companies to that actually pay through faster payment is they do everything you've just described, and then they commit at within the working day, the day before, or the payday. Some actually have moved to making the payment at 9 a.m. on payday, or 10 a.m. on payday, so that they actually commit, at maybe 9 a.m., 8:30, whatever it is. So I think it's flexibility. So take the risk out. Flexibility then is in your control. You're not facing a deadline that's I've only got to 10:30 on this day. You've got a lot more time. And then from a cash flow perspective, not one I always sort of enter into, because it depends on a company's relationship with the bank. But in some cases, a business, when they commit, the money that they've committed, so if it's £2 million, is taken from an available balance.
Yes.
And obviously that doesn't work in that way with income group. So the money is placed into their client balance, which is safeguarded, and it's the money is committed when we actually make the instruction to faster payments. So typically it's 1 second past midnight on payday. So there is I think there's a cash flow benefit in terms of cost, but it's not one I get into because it's difficult because each relationship is different. But
I suppose the key risk really is the overage limit. So we experienced this in the past where you've got a HMRC payment due in the same week that you've got a net pay payroll to run, and you might have a large supplier payment run. And the bank facility is generally on a weekly basis, so you're allowed a credit limit per week for Bacs. But if you then go over that limit, you have an overage fee, and you can't not make any of those payments in that particular period. So it's important then to make sure that you are discussing that with the bank. So the faster payment element takes that away. And from the risk perspective, what we're not saying is that everybody runs their payroll and instantly pays employees, are we? What we say, the latency is still built into the process for you to have the check-in, the validation, and you're scheduling in advance of that payment, and any point upside can still be reviewed and changed.
Yeah, that's exactly it.
And from a checking perspective, because through Bacs there is the rejection process, there is the AWACS process in terms of changing bank details. How does Income Group validate bank details when you upload a file into the solution?
Yeah, so we've built that in with customer input. So when the file comes in, and I'm just so I'm saying a file, but data comes in, it'll be however many lines of data in it, 1,000, 2,000, whatever. What we'll look at then is the sort code account. We'll look at the information that's presented, and anything that isn't validated, as in that bank information, we'll extrapolate into a report, but we'll notify you.
Yeah.
So we'll tell you that of the 2,000, these 4 transactions are in the file, but they haven't validated, so the money will not be credited.
Yeah.
So it will tell you all of that before you've done it. If you choose to ignore the notification, the payroll will run, and the 4 will not be paid, and the client balance will have that amount of money in the client balance. So it's a good point because it's actually giving you that extra time so I can run the process. So payroll is 99.9%. I get that, but that 0.1% where there's those 3 or 4 that whatever reason aren't going to be credited, you actually know before it's happened.
Yeah.
And again, I talk about it not enough probably because I think customers that have said, when I've asked what's the benefits you've gained, they've said, well, actually we can be reactive to things rather than proactive with things rather than reactive with things, and that helps. So we've gone to someone that's failed the validation. It's because they've changed bank and haven't updated payroll HR. So that can be dealt with before the payments actually been released. So it's a really good point. But it's just having that built in to help with validation.
From a financial policy perspective, then, one of the other challenges and questions we've seen is that businesses have written into their financial policies that Bacs is the default payment method. And that's obviously a historical thing in terms of that was the predominant method after checks. So from an ISO perspective, from a data security perspective, there is nothing actually to prevent any organisation using faster payments instead of Bacs, is there? So policy can be adapted.
No, not at all. Sorry, absolutely, yeah. I think it's probably that, we'll have it written into our own policy somewhere, but it's either adding or replacing that method that is referred to as Bacs. But I also understand it because it'll feature into employment contracts, it'll feature into other things, and maybe it's just a refresh of that. But there isn't. Sorry, answer your question. No, there is nothing preventing that.
Okay. So thanks for coming in, Ian, to see us today, and for the really interesting conversation about faster payments, earned wage access. And if anybody's got any questions about the process or about the solutions, then get in touch with either Face or Income Group.
Thanks very much. Cheers, James.